We're going to give everybody one more minute. Go ahead and get started at 11:05, and we're going to go ahead and get started here shortly. Awesome, awesome, awesome. So I think everybody's on right now. It is 11:05. We are going to go ahead and get started here. Hello, everybody, and welcome to our Coffee and Credit webinar. We are very excited to have all of you guys here. I wish I could see your guys' faces to see all of the coffee you guys are drinking. Today we're excited, and we're going to dive into an informative session about credit. Today we are joined by the amazing Vicky Collins, a seasoned branch manager at a local credit union who brings over 20 years of experience plus, right? So that's a long time, everybody. That's almost as old as I am, right? She has a ton of experience, and we're excited to have her today. And today we're going to be, learning some valuable insights on, credit scores, what makes them up, practical strategies to improve and maintain strong credit. My name is Cameron Valentine. I will be, kind of hosting as well as, helping out if needed. I'm an account executive over at Tidal Loans. We are a private lending company focused for real estate investors, right? So we specialize in 1 to 4 unit bridge loans and DSCR loans for those 1 to 4 units. But now our product line goes a lot deeper, right? We like to consider ourselves a one-stop shop. We offer ground up construction loans, 5+ unit multifamily, commercial loans, transactional funding for those wholesalers. We lend to foreign nationals, and we even have some 100% financing products on our bridge loans. At Tidal Loans, we're not just lenders, right? We're investor partners, whether you're, flipping your first home or, looking to refinance your portfolio of rentals, right? We have the new investors as well as the very seasoned investors that we help out. And, we're here to give you guys the most information possible to kind of help your investment journey along the way. And credit, you'll learn today, is very important in this line of business. So, Vicky, I'm going to go ahead and pass the mic over to you and get this thing started for you.
Well, we appreciate that. And yes, I hope everybody's got their coffee. So my name is Vicki, and I do want to thank every one of y'all for joining us here today. Just to tell you a little bit about myself, I went to work in the financial institution or industry back in 1983. So it's 40 plus years. But I did start at the bottom. I started at the bottom, started in bookkeeping. I worked my way up from bookkeeping over to the lending department to now being a branch manager. So over the years, I have been able to help many people who really wanted to correct their credit and showing them how to do it and do it on their own. You don't have to pay someone to fix your credit because there's a lot of stuff you can do on your own. So let's dive into Credit 101 and understanding our credit. Okay. And the agenda today we're going to do is what does a credit report tell us? How does the credit report affect your buying power? Understanding FICO scores, and what can we do to repair your credit? What does a credit report tell us about you as a buyer? For many years, the handshake is all that it ever meant. People shook hands, you trusted each other. Now a piece of paper tells us how you pay your bills, who you work for, where you live. It tells us your history and your story. So it's your story. Bad things happen to good people, but you must do your best to correct it and find the road to get started. Buying power is king. So credit scoring is a system of creditors used to help determine whether to give you credit and how much to charge you. So under that, you got the bill pay history, the type of accounts, late payments, outstanding debt, and the age of your account, which is very important. Closing credit cards shuts down the age, shuts down your history. So it's always important to keep things active. Things you can do to help your credit: make a budget, check your credit once a year. Do the free credit report, or if you have a credit card that gives you your little FICO scores. We'll talk about it later on how they may not match up with what your institution pulls, but at least it gives you an idea. Is your credit going up? Is your credit going down? Create a savings plan. You always need to have at least 3 months of savings put back. You don't know when bad things happen to good people. You need to have that small stockpile. Stay away from payday loans. That is so important. They're easy to come by, but at the same time, it can get you in trouble. The FICO score, the anatomy of the credit score, the length of credit history is about 15% of that score, makes up that score. The types of credit used, so there's a difference between a car loan and a credit card. One's a revolving, one's closed in. Revolving means it doesn't have an end date. A closed credit means you got a day it's going to pay off, and that point it's going to be over. You got new credit, the revolving credit, and payment history. That's what makes up the scores. How long is the information retained on your credit? A lot of people want to know when's this going to fall off? Well, some of it doesn't. So open accounts in good standing stays on forever. But like I said, you've got to keep it active. Closed accounts in good standing will only stay on there for 10 years. Late or missed payments, 7 years it stays on your credit. It'll show up how many times you were late. And 1 day late will drop your score for over 6 months to build it back up. So it's really important not to be late. Collections accounts stay on there 7 years. A bankruptcy, depending on the type of bankruptcy that you file for, could be there 7 to 10 years. Credit inquiries, and then civil judgments and paid tax lien will also stay on there for 7 years. So on this page here, it kind of tells you a little bit about the different FICO, what makes it up. But a lot of times when people ask, well, why is my credit different than what you pull? That's because a lot of the credit bureaus use everything as an equal, whereas institutions are your brokers or your lenders and things like that. We pull a different FICO. We want emphasis on a different part. So like a FICO 8 is considered the standard. It's widely used by a lot of the lenders, but it may pull a little bit more on your revolving. How do you pay your unsecured, versus your secured? But most credit scores do fall within the range of 300 to 850. I have seen it occasionally above the 850, but that seems to be kind of a new thing. But the FICO 9 is a little bit more updated, weighs a little bit more on collection accounts, things like that. And then your 10 and your 10T is the newest versions, which do the trended data, which looks at credit behavior. So that's the reason that a lot of times that your scores will be a little bit different than the next one. We're going to show you an example of a credit report, but give us a second to kind of turn it. There we go. There you go. So on this credit report, as you can see, it tells kind of who pulled it. This is only in a sample, so you're not going to have anyone's actual information. But this is who pulled it. And then when you go down here to the body of it, it shows the different credit scores being pulled by the 3 major credit bureaus. So as you can see, a lot of them are different. Each one's different, and it's because of the way they pulled it, depending on what they need. But it has, your name in it, has your address. We have pretty much what you do. Everything is on your credit report. And then when you get down here at the bottom in the body, then it tells you who is your creditor. So this one here happens to be Chase. And on Chase, it tells that the line is open, that there's no times late. So everything has been in perfect pay on this one. So a 720, a 730, that's not a bad score for anything that you're needing. So yeah, right. Give us a second to switch it back around. But the other thing I did want to mention, sorry about that, about doing the credit, you'll see that it does in here that pulling your credit does hurt your score sometimes when you're out shopping. Things like that will hurt your score. And the reason they could be different could be a different models being used. The lenders might, the main point is all lenders don't report to the same credit bureaus. So whenever you report to one credit bureau, you pull one credit, that's the reason that you see different numbers. Maybe you bought a car at a local mom and pop auto deal. They don't report to your credit bureau at all. So when you get ready to buy a car from a major dealership, then the major dealerships like, we don't see any cars on your credit. So that affects your credit. The time the lenders report. Most of your institutions report monthly, where maybe your credit cards only report once a quarter. So those also tend to make your credit score a little bit different. Okay. So my suggestion to repairing it is go to freecreditreport.com and get your credit report. They'll give you all three bureaus. It's free. Do not pay for your score. You can get your score anywhere. By your credit cards, you can get your score different places. So there's no reason to pay for it. Go to that. You get it once a year free. So always do that. Check the information on the report. That's so important. Are all your people on there? Even if you're an authorized signer, it's going to show up. If you're an authorized signer on someone's credit or credit card and they max out their credit, it's on your credit, which will also pull your credit down. If there's an error, you need to, at the bottom of all those reports, it says, please contact this agency if you see an error. So actions that can hurt your credit, again, it's missing a payment. It takes 24 months to restore it. One late payment. Maxed out credit cards is another. Even if you're one of those people who charge everything to your credit card, but you pay your credit cards off at the end of each month, you may not, your payment may not reflect by the time I pull your credit or your lender pulls your credit. So I truly suggest to have 2 or 3 credit cards and to keep all of them at 30 to 50% off. And you can still pay them off at the end of each month, but it will never hurt you. Don't close out your credit cards. Like I said earlier, it's history. You need the history, so you don't want to close out credit cards. Shopping for credit extensively. If you know you're going to buy a home, don't go and start shopping for cars. Kind of get a plan. Kind of know, okay, in 2 years I want buy a home. So the year before, let me go and buy that car. That way you get one hit with your car and one hit with your home, and it keeps your score up higher. And borrowing from a payday or one of those third-rate finance companies, when people pull from there, it's very easy to get credit. So they're considered kind of a not as good a lender. That's the reason, because you couldn't go to an institution, a banking institution. So that kind of shows that that you're having trouble. So we really, those do pull your credit down. So another thing I think someone had asked a little bit about was negotiating and settling debt. It has an impact on your credit. You know, you get your credit card up there and you want to negotiate and kind of get out of it. But it's short-term relief on your pocketbook, but it's long time hurting because it then goes on your credit as a negative. So your score then is pulled down due to it. Okay. So we talked about how to repair it, but how can we improve it? Pay your card, pay everything on time. Don't close your credit cards. I repeat it several times because it's such an important thing about history. Continue to make payments on time. Uh, Eventually, older late payments will become less significant. So just do your best on that. Slow down on opening new accounts. Really get a plan. This is what I want. This kind of card I want. I want airline miles, so I just need that card. Don't buy it and get a bunch of store cards knowing that's not really what you want. Acquire a solid credit history with years of experience. Move revolving debt into installment debt. So what that means is, say you do have a credit card and it's maxed out and you know you can't pay it off. Well, then go to your institution and maybe get a signature loan, a closed-end loan, and pay that off. That splits your credit history, and that splits the types. At the beginning, I kind of talked about different types of credit, how it affects your credit score. So now you've got a closed end versus this revolving, and your revolving opens back up. So that's the reason I say, change them over into something else. Budget your payments. You have to build a budget for paying debt. Put your debts in order. People will come to me and ask me a lot about how do I get out of paying, not get out of paying the debt. How do I pay it off? And some people will go with whoever charges them the highest interest rate. Well, credit cards nowadays are all high. So that's not necessarily what you want to do. I like the snowball. I like to be able to put all my cards in order and whoever I owe the less to. Maybe the payments are only $25 and that's all I can pay. So once I get that one paid off, I go to my second card, and now the second card that I'm paying on, I just roll that payment into that extra payment, and now you're doubling or you're adding that extra. You do that all the way to the end. It's time consuming, but it is better than negotiating and getting out of it, and it actually will help your credit. Perfect payments, history, and you just roll that over into the other one. So be very mindful before you co-sign for anyone. Their payment history will reflect on you. You always have that friend, or you have that family member who, I promise I can pay, I promise I'll pay, and doesn't always happen. And remember, when you co-sign or you sign on somebody else's credit, you're telling that lender, I will pay their credit, I will pay their loan. So if that's not what you want to do not get on it. So let me go back. We have a few tips I want to kind of go over. I do have a few tips that I really would like to bring over. Reminders, mainly kind of reminders. One of them would be limit your hard pulls. Like I said, 2 a year. Pay your bills on time. Reduce your debt, but keep it active. So that's why I say, kind of, if you got a card you haven't used in a year, go buy a tank of gas and pay it off. That keeps it active, because a lot of times we'll see on the credit report where a card is closed due to the lender closed it. And that's because it became inactive. If you don't use it, you don't need it in their eyes. And it's a liability on them. So it's really important to keep them active. Keep credit cards down to 30 or 40%. Don't charge up one card to pay off at the end of the month. Just use 3 cards, spread it out, pay them all off when you get through. Do the free credit report once a year. Dispute all your errors. Have a good mix of credit. You'll see that when you pay your car off, your credit score is going to drop. There's your mix of credits. You've ended one of your mix of credits. Keep old cards open, history. I don't suggest for Experian, I think, offers the boost. And the reason that I don't suggest it, other people may, because it will help your credit go up because you're paying your electric bill, you're paying your phone bills, you're paying everything on time. But all those are showed on your credit report. So, say your electric bill this month is $400. Well, you have a $400 payment, which shows to us being part of your DTI, which is your debt to income ratios. So, how much do you make? How much are your bills? It's really important. And then we, as lenders, only want your DTI to be about 40-45% so that you have that other 60 to pay your bills, pay your electric bill, pay your water bill. And now here it is showing on your credit, and we still got to get you down to 40%. So it's kind of like doubling it along the way. So if you do use that boost, be very mindful to it and remove it once your credit gets kind of built up. And don't wait to stick to the plan. If you know in the future I want to buy a house in 2 years, don't don't wait till you're out looking at houses and then ask how do I repair my credit. What do I need to do to fix my credit? My DTI is too high. So it's really important to make sure that you that you do the other part. And then there's also another section, I'm going to let Cameron step back in, that they also have to help you improve your credit.
Yes, yes. Thank you so much for passing that back over to me. Excuse me. So one thing I wanted to speak about here with everybody today is, we all make the mistake, right? She just kind of touched on it when you're already looking at houses and, maybe you didn't, take her advice and maybe start a year or two or however many years in advance or how many months in advance, right? And you're now under contract and you're ready to buy this property and come to find out your credit is an issue, right? So one thing that we have is something called that we're able to do. We have our own in-house processing team that will assist you doing this, is something called a rapid rescore. And what that is, it's a process used by typically lenders to quickly update your credit report with new and accurate information. For example, let's say you have high utilization above that 50 or 30% margin. We can pretty much take a look at your entire credit report because, like she kind of mentioned, it will be on your report of what your outstanding balance would be. So we could run something called a what if scenario where we pretty much input your credit data into our software. And, it pretty much just tells us like, hey, if you were to take, I think we had a Chase on that example page, paying down your Chase balance to, I don't know, $1,000 or whatever amount we kind of see to say, hey, this will get your credit, or it will at least get you the highest possible chance to get your credit to what is needed. Or, what we can do is, correct account detail, right? Just like she was mentioning, where at the bottom of all the bureaus and all your credit reports, it's going to say, hey, if you feel something is incorrect, let them know, and we can kind of help guide you in getting you that contact information to maybe help you dispute it or tell you like, hey, we need to get a letter going on so we can get it over to them, how to kind of do it. And again, that is called a rapid rescore. And now let's say we go down that route, right? Pretty much it only takes a couple days, right? Now, in some instances, depending on what is actually, bringing down your credit, it could take maybe to the next billing cycle, but that is a lot faster than maybe doing it individually, where it's going to take a couple cycles to kind of get in, just because you just let it hey, revolving, you get it back up, right? So with us, we can kind of go ahead, reach out to those bureaus for you. It only takes a couple days depending on what exactly it is. And then also, why it's so important is because, again, you're increasing your credit score, which helps you qualify for maybe better loan terms or even just meet our minimum score requirements, right? So, there are a lot of potential there, and we do have the availability to help you with that rapid rescore. There's numerous times where we've done it successfully, and I just wanted to let you know that at Tidal Loans, that is a tool at your guys' disposal, and we do also have people on staff that will help you do that. So if there is any questions or need any assistance, and your credit is, maybe not the greatest, during your loan process, we can definitely try to help you out with that as, the best of our availability. So yeah, I really do appreciate you, giving me the floor there, and Vicky, for us to go ahead and, help them with, getting their rapid rescore completed.
Absolutely. Absolutely. But basically, this kind of does end our presentation. So if there's any questions that you may have, um, please send them over and we'll see between the two of us if we can get your questions answered.
Yes. So interestingly enough, when we had them sign up, we also had them fill out some questions, right? So we do
Okay.
actually have some questions already asked by our people on this meeting here with us. And first things first is we got this quite a bit, right? People want to know real life mistakes that you have potentially encountered, and how you kind of help them do that. I know you gave a bunch of different tips, but a lot of people's curiosity was, just kind of a real life example of where maybe, kind of helping, where you helped people adjust their credit, what steps you took, because they want to know these proven ideas. So do you have anything that you have maybe seen or done with helping somebody's credit?
Well, I have, the snowball payoff has been one of the most successful. Just helping people get their credit in line and or their payments in line and trying to start knocking them out a little at a time. That has been the number one help that I like. It takes a little bit of time, but it absolutely works. It worked for me. That I came into this world at, a low 600. I wanted to buy a home. I put my credit cards, and now I'm well up in the 830s. Um,
Wow.
everything I have is paid off. It works, but you have to be disciplined. You have to put those cards away. For several years, I'd take my credit card and just shred it when they'd send me a new one because I was still paying the bill. But it has definitely worked for me. Another thing, is when we get to the bottom of a credit report, we have people who we see where they have fraud. It's real important to be mindful if you put a fraud deal on there because we're going to ask about it. We need to know those things. And some people put it on there just for security, just so you do ask them, but it's something we're going to ask you. Um, I can't stress the late payments. Whatever you do, don't wait till the 10th day when the payment was fixing to be late. Pay it 10 days prior, not 10 days after. Try to set yourself a budget and follow those budgets. So that those are my best advice and tips on staying on top.
Yeah, great tips there. Now, another question that was commonly asked was, you know, you always hear about it, right? Getting your credit pooled, it hurts your credit. How many points typically, when you do incur a hard pull, does it typically kind of bring down your score?
What I have seen in mine, it's been about anywhere from 10 to 20 basis points.
Okay.
But the main thing is, like, say you are car shopping and you go to that, we suggest you go to your institution first, get pre-approved, and that ends all those pulls. But if you are shopping in a car or a car lot, be sure that you shop all within a quick period of time because every one of them is going to, if you allow them, every one of them is going to pull your credit. But you're allowing them to do it. If you go shopping for a car this month and say, you know what, I think I'm gonna wait, and then you go shopping for a car next month, well, that's two really, really hard hits. So it does count against you on that. But if you're car shopping now, go car shopping, and but also the main thing is if you know you're fixing to buy a home, don't have your credit pulled prior or during the home buy because it will affect your credit.
Yeah, absolutely. And just to kind of piggyback that, off of that, everybody, here at Title Loans, when we do check your credit report is good for 90 days, right? So let's say you're doing a fix and flip and you have a couple that you're looking at and you're like, maybe I want to start this one now. And then, a couple months later, you are going to buy that house. Just know that your credit report is good for 90 days with us, right? So if we pull your credit, you have a 90-day window to where you can use it again and not have to incur another credit check. Now, so again, if you do wait out that 90 days, we also would have to repull credit. And, again, that's multiple pulls back to back. And, like she just kind of mentioned, right? It could be maybe anywhere from 10 to 20 or so points, each time you're getting that credit pulled. So, keep that in mind when you are getting out there. We have some serial investors out there. They're buying many, many homes at once. Understand that time frame because it can be very, helpful as well as imperative to not continuously having that credit ran. So I did just want to, let everybody know that as well. Another question that we had, so we deal with a lot of investors themselves as well as a lot of brokers, right? So a broker, actually a good friend of mine, they asked what are some red flags, right? I know you've probably seen a bunch of different credit reports. What are some red flags? Like, what are some areas that maybe, when people are looking at a credit report, that they should be kind of paying more attention to, or maybe, as a broker, just reviewing a credit profile to maybe say, hey, yes or no, can I help this client? What are some areas on there?
Well, one of them main thing is late payments. That's the huge big red flag. Another thing is how much new credit. If somebody's got a lot of new credit out there, several credit cards, and they're building them up, they're charging on them. That's a big red flag. Another thing that people get into whenever they go to buying a home or a car is they're used to living in $100,000 house and now want to go buy a $500,000 house. They have no comparable credit. So that is something that we as lenders look at. Have you ever bought that size of home or have you ever bought that size of car? Um, it's kind of hard to go from a Toyota to a Lexus and not have to put a down payment on it.
Right.
So those are red flags.
Yeah,
Those are red.
no, absolutely. Another area, everybody, because again, we are very involved in the credit space when we are assisting clients or even with brokers. Some other areas to maybe kind of pay attention to, everybody, is, when you are looking at it, again, it tells your story. Do you have those late payments, right? Typically, like with us, we can potentially use like a rolling 30-day late, but once it hits that 60-day, it could become an issue with, not even just us, but a lot of lenders out there. So you want to kind of pay attention to when that late payment was and how long it was for. Another thing that should, always be, tailored to, you want to make sure you're paying attention to these with these brokers and when you're reviewing them is, do they have any bankruptcies or any foreclosures, right? Because with a major credit event like that, it could put them out of contention of, maybe they're only a year old or 2 years old or whatever the case may be. That might be a severe issue to where, hey, maybe this, because I know brokers, they're shopping around, hey, that could be an issue. So you might want to check with your lender to make sure that that won't be an issue. And, always let us know on the front end, right? Because it's a lot easier for us to know what we're going into. And instead of trying to hide it and we find out about it, and now we're maybe a couple weeks into the loan process, and now, just completely flips everything upside down. So, definitely pay attention to things like that. Great. So now another question that we had, this was probably the biggest question that we had, right? Was, are there any myths, right? You hear about it all the time, my credit report is so low, what are some things that, maybe you hear a lot, but then when you're actually, doing it, like it's a lot easier than you think. Are there any myths that you think that shouldn't be out there but are?
Hmm. Well, one myth is people who believe in cash. You know, I want to pay everything in cash. I'm a cash kind of guy. Until you need something, and then all of a sudden, all your cash, no credit is bad credit. And that's the biggest myth. You've got to control your credit. You've got to pay, manage your bills. You got to prove on paper that you can pay and take care of your finances. That's the biggest myth. People that pay in cash, they think cash is king. It's no longer king.
Yeah, most definitely. Credit is definitely king, right? Credit is definitely king. And kind of the last question here that was given to us by our viewers here was, you know, how long do you think when you get that credit report? I know with a rapid rescore, like we just mentioned, it could really be a couple days, but let's say they're trying to, handle it on their own.
Right.
How long does it typically take from, trying to start that process to eventually kind of getting your credit up? How long do you think that would typically take?
Well, everything has a different situation. Everything has a different outcome that you want. Are you looking to buy that home in 2 years? And if that's the case, you're giving yourself 2 years. So the snowball that I worked on and I gave the example of, it took me 2 or 3 years, maybe four, to completely get it credited. But it's a one income. I mean, I had to manage it on my own. Where maybe you have a second person as second income, where one person can get on those credit cards and pay them while the other person's paying the mortgage or paying the car payment or whatever. And with your way, you're talking a lot quicker. But I would say within 2 years, if you follow a plan and a program, your credit will you'll definitely see it go up. Yeah, got to be patient.
Yeah, no, absolutely. And everybody, 2 years might seem, oh, that's a long time. But, when we're talking about credit, right, that
Right.
is your lifelong credit. So, if it takes you 2 years or 3 years to get that credit up, just think about what it's going to be like once you do have it up, right? So it's definitely worth the time, should it even take you that long, right? Again, we do have some availability to help you get it up a little bit faster than that. But now, again, there's nothing better than, fully getting your credit, repaired or fixed and, having just, lifelong good credit, right? And then once you have that plan and you do get it up, make sure you guys are sticking to it even after you get it up, right? There's been a lot of instances where people, tell us, right, as a lender, hey, I've always had a 730 credit. And then, they got off their plan or they started doing all of these abnormal things. And now they're at a low 600, high 500s, right? All because they got off their plan. So just keep in mind that when you're building your credit, you want to continue those safe practices to keep your credit higher, and that will definitely be key. So yeah, everybody. Vicky, we really do appreciate it here. We're gonna go ahead and wrap it up. We're right at that allotted time here. Everybody, it was, a great appreciation for you guys to hop on. Again, my name is Cameron. I am one of the account executives over here with Tidal Loans. Now, also, you'll see in the screen behind you, Vicky, her card, right? So, like I said, she is actually the branch manager over at First Service Credit Union. And there is her information. If you guys need help with your credit or you guys want to, take those initiative steps to help fixing it, she is a great contact, right? Here at Title Loans, we want to give you all of the resources to, increase your investment journey. So, we would love to get you guys connected with her. There is all of her information. You guys go ahead and take a picture, screenshot it. And if you guys see that little QR code right there, it's very interesting, right? Because you guys can go ahead and open up account with her at First Service, and she will also be able to give you some consultations about your credit. So if you guys are interested in something like that, please reach out. And if you guys have any questions after this, me, Kyle, Juma, our other account executives would be another great resource for you guys to use. Please, we want to help you guys out. We want to give you guys financing. And the best way to do it is to have a good credit, right? So, we really do appreciate everybody's time. Vicky, you were great. We really do appreciate your services. And if anybody does have any questions, just reach out at any time. Again, there is her information. We will also be sending you guys out a thank you just for hopping on and joining. And so, again, just reach out, use us as resources. We have a lot of members who have, maybe been there, done that, right? So, just definitely reach out. We're definitely a free tool for you guys to use. And, we would love to continue the conversation. So it was definitely great. And it was nice seeing everybody. I hope by now you guys have finished your daily coffee and are ready to attack this Friday for the rest of the day. So, thank you guys so much for joining, and that will conclude our day today. And again, just reach out if you guys have any additional questions or, whatever the case may be, and we'll try to help you guys out. You guys have a good one. Thank you so much.
Thank y'all.